I still collect crypto art. Lots of people are collecting crypto art. The market cap for traditional contemporary art, it's something like $2 to $4 trillion. We're maybe at like 10 to 15 billion. Like that's asymmetry, and that's going to close as more people interact with digital art in meaningful ways. And the file format of NFTs, of proving scarcity on a blockchain, doesn't just have to be for things with no external dependencies. It can be for things with lots of external dependencies. And I talk about that in this piece, right? Like games is a great example. Social objects is a great example. In some cases, finance.
Internet Explorers.
It's Friday, gotta get... No, we're back. Jeez. It's Friday, we're back, episode 58 of Internet Explorers. I love this clickbait headline. Shout out to Threader. NFTs are back? Question mark. Very excited to dive into this week's show with you all. I mean, what a week, gentlemen. Bitcoin at 100K, and then a nice little dump to scare people a little bit after it, but maybe we...
Yeah, what happened there? Was that just like some flash liquidation shit, or...
I don't know. All I know, apparently, it was a couple Billy liquidated in a.
I wish I was good. I wish I was good enough to like catch those, but they happen. I'm retail.
Come on,
we're all retail.
Yeah.
We're all retail.
How we doing, Peace? We got Peace back on the screens.
Exceptionally well. Doing good.
I hope you have some surprises. Yeah, great show for you today. We got Bitcoin at 100K. Josh has forced us to do some predictions looking into the future, which I loathe to do. But
I told you an hour ago that you need to have some predictions ready.
Yes, appreciate that. Compounding value in ephemeral world. This is going to be a fun conversation. You literally just loaded up a whole bunch of topics here that we could nerd out for like an hour on each.
The point of the show.
It's going to be fun. But we're really excited today to have Derek from Collab Currency join us as a guest. And Derek's been a big long-term supporter of C Club, one of my go-to people if I have existential questions or even specific questions. But I think we're coming into this week thinking about, starting to see some conversations bubble up about NFTs getting bids. Are NFTs back? The liquidity cycle from Bitcoin to alts to NFTs. And I think Derek's had a very long-term, sober view of kind of our thesis around, and I'll say NFTs. He might use a different term that's to categorize that. So I thought it'd be really useful just to get him in here to, he's on the ground level of so much of this stuff, along with this investing that they do beyond, along in this big consumer space that we're very excited about. So let's bring Derek up. So I'm not just talking about him behind his back.
What is it? Network digital objects or something?
You got it.
I'm trying to. Yeah, there you go. Nice.
Got the rallying cry going. Thanks for having me back, guys. I love this pod. I love this space, and yeah, excited to get into it. Where do we begin? There's a lot happening.
Well, I mean, I think the great thing is that, like, I've had these questions for you in the back of my mind, and I haven't asked. So I'm just going to show up here and be like, what would I talk to Derek about if we were one-on-one in this sort of thing? And I think my big question is, if we sort of look back on maybe the conversations that we would have had around in the last bull market 2 years ago. I mean, every art blocks thing selling out, these weird looking apes are all of a sudden worth houses. Yeah, and so I think there was, clearly a lot of hype at that moment, and then clearly the following 2 years have been a massive fall off in those assets and in the interest and in the narratives, etc. And so I think you had such a good articulation of sort of the why behind network digital assets, and I would love to sort of maybe get into that and then see if that has changed for you or evolved, and see maybe how we apply that to where we are today.
Yeah. Okay. Great question. We're diving right into the deep end. I would say it's impossible to have this conversation without kind of looking at some of the local events that are happening right now across crypto and macro. You guys talked about it a second ago, but Bitcoin just tripped 100K for the second time. We've got ETH it's moving past that wall of 4K, and it's turning it into support, which is exciting. And we've got kind of like the long tail things that are a little bit further out on the risk curve. That could be like DeFi protocols or L2s or Alt L1s or NFTs that are starting to kind of catch a bid and like find interest again. It's really important in times like this. Like this is a space where everything gets marked to market, right? Like these are very liquid markets. They're global. They're 24/7. And so oftentimes like these things move to a correlation of one when there's times of panic, and what we saw over the last year and a half post FTX, or when there's times of euphoria and the repricing. And I think that's largely what we're seeing. We're seeing excitement at the at the top assets, let's call it Bitcoin and Ethereum, they're starting to institutionalize in a really interesting way through the spot ETF infrastructure, through things like Powell, the chairman of the Federal Reserve, comping the value prop of Bitcoin to gold in digital form. I think that's also an important piece, not just because it's a psychological marker that we've now crossed publicly, but also because gold is 7 or 8x the market cap size of Bitcoin. And you now have planted in people's brains this idea where, that delta between digital gold and the networking that can happen and its composability and interoperability, it gives it kind of like a supercharged value prop compared to physical gold. And so the market is going to want to close that delta as time goes on. And as that delta closes and people come into the asset class, and we go from 30% of all Americans to 80% of all Americans who own some crypto assets, they're going to go further out on the risk curve into things like DeFi protocols and NFTs and gaming assets and things like this. And so I guess the first point I'll make is like, a lot of what we're seeing before we go to NFTs and digital objects and the networking around that stuff, I think it's important to recognize how correlated this entire space is and how small of a base we're coming from. Bitcoin, the big asset is a $2 trillion asset. It's tiny compared to kind of like, commodities markets and finance markets. Gold itself is 17, 18 trillion. So, think about the rest of this stuff. It's coming from such a small base. Like there's asymmetry that's priced in, and these markets can move very quickly. I think your question's about NFTs. That's why you brought me on here. So I can.
Well, I mean, I love that you're actually answering, because I think like implied in some of your writing, I think, is that Bitcoin is actually a lot closer to NFT, or the sort of network composable nature is ultimately what makes these interesting.
There's two parts. There's like the networking of Bitcoin. It's a networked asset. It's global. There's lots of holders. You can prove who owns what. You can send value instantaneously 24/7 across the globe. And there's like, these things can compose and interoperate with like other, trust minimized financial protocols. But I think that's one reason why I think it's similar to NFTs. Like there's this attention networking that happens around NFTs in a similar way. I think the second part is the external dependencies of Bitcoin. There's 21 million. There is a reluctance to change any of like the core code by its contributors. There's no platform for growth to underwrite there. It's just commodity money for the internet. And it's fixed supply, and people understand that emission schedule, and it's very easy to digest. And as we talk about NFTs or digital objects, there's lots of flavors of digital objects we can talk about. But, the core crypto art, the things that have really been valued, like fine art, like things like punks and autoglyphs and squiggles, these share in both of those properties. They're networked, there's lots of holders, and they've got few external dependencies. They largely don't promise anything. These are commodities in many ways, and they're artworks that were created at a snapshot in time. There's all sorts of contextual richness that exists with each one of these three works of art, and for what they stand for, and what the industry that they kind of carved out after them. They're kind of like these three kind of networked collections are looked to as kind of like the barometer of how store of value crypto art is performing, and largely these things trade together. You guys are familiar with SquiggleDAO. I think Seed Clubs was an early backer and helped accelerate this business. But they've got this data sheet where you can kind of see this, if you want to pull it up, how those three collections kind of trade together. And Punks is largely the one that drives a lot of this interest. It's got the deepest markets. It's got the most liquidity, the tightest bid-ask spread. And largely, Squiggles trade at a historical proportion ratio to Punks, and Punks trade at a historical proportion ratio to autoglyphs. And so, when we see kind of interest return back into crypto art, these three things trend together. And I think you can see that in the historical data that I sent over. But let me pause there, because I do think, we can certainly double click on why this is happening and how it continues to happen.
I guess I think the piece that Piece has up here on screen has actually been, I mean, you could essentially the articulation you just made here, right? Yep. And so there's sort of like and this was, I would say, even pre-major hype in NFTs, and so I think there's sort of like there was sort of this era of pre-hype NFTs that I think were very much built around they either came out first or in an interesting moment. They had some unique technical unlock, so art blocks, everything on chain, etc., or there was some cultural moment they kind of stepped into. And then there was just like a massive amount of fast followers and then late followers, and so I think very important to sort of separate those two things out. But I think I'm very interested in sort of like that late follower piece, because I think there was this whole narrative around NFTs that NFTs were sort of a unit of ownership in a network or a unit of ownership in a community. And I think we sort of, and maybe like a good way for creators to make money, et cetera. And it seems like that is the part of the market that proved to not really be as sustainable. And so I think that, a lot of our audience is sitting here thinking, trying to make sense of like where value is going to exist in the market. And then as builders, how do we use these various token types, digital objects, tools, et cetera, to go and create value alongside our community. And so I think if we maybe leave digital art off the side, because I think that's pretty well explored. I'm kind of curious about like do we see, is the narrative and like the value for NFTs moving forward, like are you sticking to this sort of thesis that you have here, or has there been sort of evolutions or new openings from that maybe would be useful for builders or explorers to
Yeah, great question. So I think NFTs are really just a file format. They're a way to prove scarcity on a blockchain. Now, there are lots of categories that can use that type of file format structure. I would say my conviction that crypto art will continue to grow based on this concept of network digital objects and few external dependencies. It hasn't changed. It's unwavered. I still collect crypto art. Lots of people are collecting crypto art. The market cap for traditional contemporary art, it's something like $2 to $4 trillion. We're maybe at like 10 to 15 billion. Like that's asymmetry, and that's going to close as more people interact with digital art in meaningful ways. And we just saw another museum pick up a CryptoPunk. There's 6 museums now that are holding Chromie Squiggles. There's just this latent interest that exists from allocators, from museums, from gallerists, from institutions to interact with art on blockchain. And as that happens, and folks get, that interest returns to why this stuff is interesting and important, that's going to continue to persist. I think that the file format of NFTs, of proving scarcity on a blockchain, doesn't just have to be for things with no external dependencies. It can be for things with lots of external dependencies. And I talk about that in this piece, right? Like games is a great example. Social objects is a great example. In some cases, finance is a great example. I think there's the project that just minted yesterday, and we can pull it up. It's called Chunks, which is an NFT project that launched on Base. It's a PFP project. They generated something like $3 million in 24 hours. There's a 24-hour timed mint. 83,000 chunks were minted. They're all come with unique wearables that can be unbundled. They're token-bound accounts. And so the scarcity model is actually detached from the PFP, right? So the PFPs are not scarce. Everybody gets one. There's 84,000. It's one of the largest collection sizes. But there are wearables associated with this collection where there's only 3 T-shirts of that kind, or 1 hat of that kind, or 50 whatever staffs of that kind. And so you're starting to see this blend where you have this networking that's happening on this shared global database of a blockchain, where scarcity and non-scarcity are kind of being used together to create something like interesting and collectible. I suspect we're going to continue to see a number of these concepts kind of persist, especially as we start blending into gaming and social and things like this around low-cost digital objects, scarcity methods with networking methods, kind of working in concert to create really consumer product-facing stuff over the next few years.
Well, I feel like with so much of this stuff, like the game's either on or it's off, and when the last cycle ended and the speculative attention towards NFTs kind of ended, people just stopped releasing interesting NFT collections, right? And like
totally.
there was a ton of those last cycle, and I think the demand has still kind of existed, but the supply of actually new, interesting, novel things just haven't been there, because I think perception has just been that the demand isn't there and the game has been off. But I think all it takes for the game to turn back on is a couple of things like this to work.
Exactly.
To your point, Bitcoin going up, and then suddenly it's back.
Is this L2 Meebits?
This feels like L2 Meebits meets Punks. They actually built it with a built-in marketplace. I think the TBA stuff was pretty clever.
Yeah.
I do feel very strongly too, and I wrote about that this morning in a tweet, that like the logical end state for building networks on chain are just like lots of objects, right? Millions of objects.
Yeah.
And being able to kind of meet a growing network where it's at, while also having very distinct or discrete places where you bake in scarcity. And I think if you can do that well, I think Chunks is a step in that direction. If you can do that well, I think the outcomes here can be quite powerful and interesting. Because at the end of the day, like, this is a very social technology. It's a very network technology. And the more you can kind of tune that knob, I think we're going to start to see some really interesting stuff.
Well, I feel like where so many of the NFT projects from last cycle fell down is they were built on these like absurd promises, right? They weren't just released to be good art or fun to collect or fun speculative game. It was like, we're building the next Disney, or we're building a metaverse, and this is whatever ownership to that or access to that. And that was obviously just never gonna happen. And I think to your point, they just need to be released with like fun and entertainment and artistic value in mind.
Yeah. I think it's similar to Bitcoin, or more recently, like Hyperliquid, where like there was ways to get exposure to these projects early on, but there was a belief system that was actually more interesting than any promises of what this thing could do, that got baked in early by early holders, by early users. And the strength of that network is way more interesting than saying we're going to be Disney. It's a slightly different way to kind of like grow a network, but I think it's actually quite powerful.
I mean, yeah, the opposite is Hawk Tua and dumping on your plebes. To me, one of the sort of open questions that founders are still chasing is like, what is the business model here?
Yeah.
Because that's the other issue with it. It was like this clearly a good way to use speculative demand, big narratives to capture a lot of value. But I mean, we're seeing, Artifact shut down. We're seeing, and my belief there is that there is just not a sustainable revenue model that actually allows these to endure. And then when we look at teams that have maybe not built sustainable revenue models, but are building revenue models and have a business models that allow them to show momentum. I'm thinking about Pudgies as an example here. There's a very sort of different view, or people were able to take a more longer term view. And I think we saw asset prices sort of relate to that. But we're also seeing all these teams launch their own L2s right now and launch their own tokens. And my sense there is that this is sort of the attempt at either one, I guess, playing in a new narrative that has a much higher TAM in the eyes of investors. But there is also this idea that sequencer fees or et cetera will actually be, revenue drivers for this community. And I have my doubts about that in my mind. And so I think this pursuit of, like, maybe I'll ask the question, like, what would you be looking for to take, leave the network no dependency objects? We're looking at the dependency objects.
Yep.
How are you thinking about the business models there, or how you can take a long-term view of these things?
So I'll give you a couple of examples. I think gaming is like totally ripe for low cost objects, and like business models around gaming could include things like, I have a couple of portfolio companies, like Parallel is a great example. So they created a best-in-class trading card game. If you've played Hearthstone or Magic the Gathering, you kind of understand how the rules of that game work. And you can use those same objects for extended ways to grow the IP through new platforms and new types of games. So they're coming out with an AI agent-based game called Colony shortly, where you can leverage those same assets for a new style of game. There's a third-person shooter that's coming out where you can leverage those same assets for the game. You can start to see a world where like there are subscription models or wearables or things like this that extend for specific environments or specific types of platforms that are related to like the core pool of assets that have done the job already of networking a global community to get excited about an IP. And I think we're going to see all sorts of variations of that in gaming. I think social is another interesting one where we're starting to see some like really interesting revenue models appear. I've been playing around with Rodeo a bit, and like I'm a little late to the Rodeo game, but I think it's quite interesting as a product. It's a very opinionated experience about, at the intersection of like crypto art and like social networks, where these things are time-based, just like Chunks was. They're low cost, they're frictionless. The app itself is very opinionated in terms of like the social experience that's baked in. And you can start to imagine a world where like artists who are not ready to like mint one of ones, but are more focused on growing a network around their collections or their objects, will start on something like a Rodeo, build that network, sell objects for $1 a pop that are time-based. And maybe those objects start to grow and it can be sold in a secondary marketplace in the future, only to spin out and launch on Transient or on Foundation or on Artblocks or one of these other platforms that is a little more suited to kind of like higher value, store value, like crypto art. And so like I'm optimistic that like, a percentage of all mints can be like an interesting a business model to bake into a product that looks like the volume and the velocity of transactions is far greater and far higher. Where like, half a half a percentage point of all revenue
Right.
that flows there can flow back to the platform. That's an interesting business model to me for a social application built on a layer 2.
To be in the issuance of like the issuance of tokens there for that issuance or trading of tokens to
Yes.
be there.
Yeah, and I will say, like, there are all sorts of regular Web 2 business models you can bake in around this stuff. You can sell merch, you can give access, you can throw parties and like charge at the door.
Boring. It's all boring.
Of course,
It's
all boring. I think
Come
the reason why we got into Web 3 in many parts is because we now have this really interesting design space where you can own shit on the internet, right? It's like that simple. And if you can own stuff on the internet that's mark to market, it's going to get priced. And that is interesting to like play with as a object of ownership and as an object of appreciation. Now, I don't want to discount those other models. I think there's SaaS stuff you can build. I think there's all sorts of things, but I do think some economic value exchanging hands on chain, that works. And being able to like figure out the best way to create a business model around that, depending on the type of product outcome or payload that you're going for, that's the hard part. And I think it's going to look different for gaming than it does for social, than it does for art, than it does for finance, than it does for some of these other things. But
You think it seems like it's going to be all the same? Like, isn't it the issuance and trading of tokens? Like, are there like what else is out there?
I think that is definitely one. And I think the hard part is figuring out as a platform or as a protocol how best to like extract rent or value out of that exchange. Because I don't think it's actually going to be the same for finance long run as it is for gaming. I think there are going to be different, that design space to me feels way more unexplored than it currently is.
Yeah, I think there's value in naming it that simply because there is so many twists and remixing that you can do there. And I think, I always recall back to, I think we have sort of almost your starting point. We have probably a series of podcasts on building at the edges with Derek way, probably back through the bull market.
Let's
back in the
fucking
day,
go.
which might be able to go back and listen to. But I think sort of this like starting point that every asset is going to be on chain at some point, but that it's the regulatory burden challenge, admin overhead, what I think the bureaucracy that exists is something that is just going to change very slowly, and that playing in these in art, in games, in social is actually likely where the most innovation and early, so come for the toy, stay for the network type of idea. And I think that still persists. Yeah, I think we are seeing a lot of teams use NFT mints as crowd funds again right now. I think what didn't follow Chonks. I think there's some of the AI teams are doing it. I think Poof and Chris Martin, who are fans of Seed Club, I think are doing theirs
something today, right?
Very shortly, I think.
Yep.
It's the AI. So we'll see how that goes. I'm not sure that is their intention, is to use it for fundraising, but I think that's an interesting signal, that shows that there at least are some folks interested. And I think so much of this is being driven by the desire, like the pattern matching, that owning an NFT is a good way to get exposure to the adventure generally and to show that you're early. And I don't think that goes away. It just is probably, as you said, very correlated with the overall demand in the market.
Yeah.
I mean, that's just been true of like real world ownership forever, right? Like that's the foundation of every brand. It's why this luxury goods market is just, these are products, you world build, you create these aspirational identities that, people see themselves represented in and want to live in, and you sell products that make it easy for them to do that.
Totally. I think I 100% agree with what you just said. I'll also say the thing that we didn't have last cycle, or just historically, as people were starting to kind of play around with this stuff, is we now have kind of a playbook of what works and what kind of doesn't work at a point in time where I think most folks around the world are starting to get really comfortable with this technology. And it's still here. It's the numbers are still going up on the screen. At this point, you've probably watched the death of Bitcoin and the asset class too many times to count. And so, when I said it at the beginning of this pod, but like when the chairman of the Federal Reserve is out here, like speaking to the value props of the core asset, it's just, I think there is an availment that will kick in at this point in 2025 that we've never really had before. And I think you pair that with some of the playbook that I'm describing, and I do think some of these outcomes could start to look pretty interesting and durable and persistent in a way that that felt a little bit more fleeting or experimental in previous cycles.
Yeah. I love that. All right, man. I'm going to leave it there with you. I mean, 20 minutes flies by way too fast.
I loved hearing all the words again. NFTs are file formats, no external dependency.
Yeah.
A big throwback to 2 years ago.
I'm sticking to the language, dude, because I actually don't think it needs to change. I think we've got everything we need right here. The tools are in front of us. We just need to use them.
Let's go.
It was an incredible piece. All right, man. Well, yeah, make sure if you're not following Derek yet, make sure you give him a follow. We'll drop that in the chat. And yeah, anything else you want to share?
No, I appreciate you guys. I'm a huge Seed Club bull. I'm excited to see what you guys do with the renewed interest in the space coming in. And you guys are in.
Well, Derek,
I'll just also say the newsletter, fantastic. The Friday episodes, fantastic. All the work you guys are doing, fantastic. The glow up here has been awesome, and I'm super excited about you guys and continuing to show love wherever I can with portfolio companies.
I love it. We did not pay him. He paid us.
You do not pay me.
This is incredible. We love it. But yeah, you're going to get a message from me next week, Derek. We are so stoked about the future of Seed Club.
Amazing.
I haven't even shared it wildly with our earliest supporters yet. So get ready, baby. Get ready.
I'm ready.
Yeah.
Thank you,
All right,
guys.
man. Appreciate your time. Best of luck.
Take
Peace,
care,
man.
crew.
Ciao.
Literally one of my favorite people.
Yeah.
I hadn't heard a good Derek rant in a while.
You know,
It was yeah, go ahead.
So Derek, is somebody. I think if you're starting a company and it is a big scary thing, especially when you're stepping into this sort of new space. And for me in the early days of Seed Club, there was a lot of imposter syndrome. There's a lot of like, do I really know what I know? And there's a handful of investors that we have in our world that I think I will never be able to fully articulate the impact they had on that early journey and in how I really hope and want to show up to the founders that we back. And just, it can be very hard coming into a new space and where you sort of feel like you're behind in many ways, and to sort of trust your gut, to trust your feeling around these sort of things. And I think across the board, both in the things that have done well for Seed Club and seeing the sort of traction that our teams have had, that early confidence that you can kind of embed in somebody is just like absolutely invaluable. And so he's been very impactful in our world because of that. So I'd hope he's probably hearing this in the green room. So just don't get your head too big, Derek. Like, come on. Like, but thank you. Yeah, NFTs. I mean, we're seeing the action happen, right? We're seeing people, get some bids. My squiggles are going up. But I think more so that people are actually using this as a mechanism to actually bring people around. And wow, we got chats popping up here.
I think I accidentally clicked something. Sorry.
Okay, I love it. It's interesting. I think this is the place you got to keep a little bit of closer eye on than maybe we have been, given just the meme coin hype, etc. And I think likely, if you think about starting a new thing right now, common knowledge is go launch a meme coin. And oh my God, is that often just like one of the shittiest types of models you could use if you're trying to build something over the long term. It's a trade-off between, maybe not the shittiest model. Getting attention matters quite a bit, and playing in that space matters quite a bit. But I think there is a perception that it is a very shitty model for those that want to be more long-term minded. And my guess is people will turn to NFTs as sort of a baby step in that direction to get their early people on board, especially given that new models, I think, are most valuable in the early innings and less valuable in the later innings as everybody's sort of built this technology to snipe it. So I don't know, interesting to see how this sort of plays out. But let us continue on. We have a big show today.
Yeah, let's do it. So, I mean, we obviously, Bitcoin hit 100K this week, and I think it's...
Is that conviction? How many chairs are you sitting on right now? Is that you're afraid to drive 10 cars? 10 cars? Do you use? Is that you put your entire family in the one driving 10 cars at the same time? Is that your third rash? How many chairs are you sitting on right now?
He is the fucking goat, and we've been channeling our inner sailor so hard the last couple of weeks, trying to figure out how to storytell Seed Club, and he is just the king of it. He is the king of it.
It is. Wow. I mean, is that conviction? He compared it volatility to Niagara Falls and the amount of energy that can be created. His 3-minute pitch to the Microsoft board is art, as far as I'm concerned. Well, thank you for that.
Yeah. But I think, so now we're here, but I think it's not only obviously huge because it's an attention grabbing proof point for just the legitimacy of internet native assets and the markets we're all here building. But I think it's just such a powerful proof point for the world changing power of just collective will and belief, which we've been talking a lot about. Like, hyperstition is real, right? Like, an idea can become reality simply because enough people believe it is. And now this weird digital thing with no inherent intrinsic value is the 7th most valuable asset on earth, right? So I think it's just so it should be so motivating to people building in crypto and entrepreneurs everywhere, because we just have this absolute proven ability to use crypto assets and networks as tools to turn visions for the future into collective belief and participation, into financial capital that you can then use to go go do stuff.
Fuck yeah.
I love Bitcoin. It's just too beautiful. Too big and orange and beautiful.
It
I
really
think
is.
Bitcoin's the best meme coin around. Man.
Yeah.
It's should be proof for much. Yeah,
That's
wild.
nice. Top 10? It's awesome.
7, man. It's gonna pass Alphabet. It's gonna pass Amazon.
Absolutely wild.
It passing Microsoft will be a good
I
moment.
mean,
for
when it
Sailor.
crossed 100K, I felt that this urge to message some of my earliest founder friends and collaborators, got into the space in 2017 and sort of had that moment of just like holy shit.
Totally.
It's just, how, and I think even a consistent thought I have is just how much conviction I've had, and also how much more conviction I should have had around
100%.
this stuff, which
That's
is something
exactly
really
how I
strange.
feel too.
Bitcoin
Exactly.
needs you. It needs you. It needs your conviction. I am driving 10 cars right now. It's ridiculous.
Did you put your whole family on one airplane? Yeah,
Every
I
time.
literally do that all the time.
Yeah.
What are you talking about?
But I'm ready to get convicted. If we're going to number 1 here, if we're gonna be Alphabet and gold,
I mean, honestly, if you
start
haven't
thinking.
seen the Sailor's pitch to Microsoft board, if you are at all in a world building, storytelling, role, which I think most of us are, according to Sailor, at the very least we all are, that is like, watch it, learn it, study it. Absolutely incredible.
We
Let's
link
move on.
that.
I mean,
Let's-
this is.
someone
I also
dro-
think.
Yeah. Go ahead.
Yeah, I also think that what's funny here is that this also is like,
Agreed.
it's like already 100K, but like, there's just so much other interesting things bubbling up. And anyways, yeah, it felt like a good moment. I got a couple messages from friends saying thank you for getting them into crypto, which made me feel very good. And also, you go, wow, there's just so much more here, baby. Let's rock and roll. So maybe that's a good transition into.
I mean, this is the reason to be exceptionally bullish, like network states, decentralized AI, public goods funding, DeSci, like all this new shit that's emerging, that has assets around it, that some core group of people really passionately believe in and are going to relentlessly pursue. Like there's just no reason it can't follow a similar path.
Pump my bags.
Yeah, so looking forward to 2025. So it's that time of year where everyone starts dropping their 2024 reflections and starts looking towards 2025 and guessing at what's coming. So A16Z dropped theirs this week. That really just kind of prompted me to create this topic and have a little riff on what we're excited about looking forward. Yeah, I guess like a few categories they kind of were hovering around. Obviously, AI and agents are a big one. It was kind of crazy seeing this and then stepping back and realizing that GOAT was only 7 weeks ago. And then like all the chaotic energy that has happened in that category since. Like we have a bunch of AI agent launchpads that didn't exist before, agentic influencers and creatives, accruing large capital resources. We have traders. We have like this whole emerging ecosystem has seemingly come out of nowhere in 7 weeks. And so I think, looking back and seeing how far it's come in just that little time, and then kind of projecting forward and guessing where it's going to be at the end of 2025 is kind of crazy and insane. So a few that they kind of bubbled up here were, one was like tooling for verifiably autonomous agents. So, how do we know that something's not human controlled and it's actually just kind of entirely operating autonomously? And then proof of personhood mechanisms, both for like, digital identity. How do we know this is a person, as well as content authenticity? Like how do we know this was launched by a person? How do we know this isn't AI generated? And then they kind of had a handful of other ones that were just kind of pointing towards, there being more killer breakout consumer products. So, an increased focus on UX, improving dev tooling and chain abstraction, better product discovery through, they mentioned WorldCoin app and the Solana phone, kind of bunch of standard boring stuff, honestly. So really
this one, builders will reuse, not just reinvent infrastructure. It's like, that is the actual definition of innovation. It's like kind of hilarious. Anyway, I have, yeah.
So really just wanted to use it. I read through it and I was like, okay, like fine, whatever, not that interesting. So really just wanted to use this as some space for us to kind of tease out what's in our brains. I tried to write a few down. Was hoping I would be more.
I hate doing these predictions. Like it is just such a, I don't know, an ego thing, right? Or maybe an anti-ego thing. Yeah. You're going to be wrong ultimately. But yeah,
I mean, I think, yeah,
sure you get me.
Okay, yeah. Here are a few.
I have a prediction. I have a prediction for next.
Okay, let's
year.
go. Peace. Kick us off.
In 2021, you were fucking right. You were right about everything you didn't even know or understand. You intuited it all perfectly. Yeah.
Don't lose conviction now.
Don't lose conviction now. Yeah, it's I love Derek's article that he published earlier this year because it does perfectly encapsulate the simple truths of what it means to transact and hold on these things, and lays down products and services, stores of value. And within that, there are 1 bajillion products and opportunities. And yeah, I just think everyone saw Bitcoin go down. It hurt. That fall down to 16K hurt, and you thought you were wrong, but you fucking weren't.
I mean, that's a beautiful one. It's hard to follow. Yeah. So okay, some of the ones I jotted down, less predictions and more just like I think extrapolations really on where we're at. So I think it's pretty obvious at this point that all relevant brands are going to have swarms of agentic influencers, trained on their lore, spreading their narratives, engaging their community. People just, humans just can't compete with whatever thousands of agents, each acting within some subculture with the intention of pulling people into your world. So I think that's,
I think there's an important caveat there. I think the current personification of agents and even the acknowledgement that they are agents might be less enduring than I think just like the agents showing up undiscernible than other users on these platforms. And I also think that we're seeing, a world open up where there are AI or agentic or generative social networks that are being created here because there's such a barrier between the perception of how people think and want to show up on the internet as people and how agents show up and what they're best at and how they play around. And so there's some really interesting products that are being built towards that lens. So I think we're sort of likely going to see a new type of social network emerge here that is on the basis of generative, which is, this isn't like the AI is creating your content. I think it's many users training agents on their own unique way in this other playground that I think is going to be pretty compelling.
Totally. Yeah, that was another one I had here. I said we'll see a breakout consumer product that's used only by agents where humans are primarily observers and speculators, and it's going to spit out a ton of tokens.
I think people will be much more involved in. I think the connection to these things from a human perspective is going to be implicit in why they're valued a certain way. Until I think
thinking about the social network use case, it's like agents as the ones posting, but people as the ones stewarding. Yeah, kind of extensions of our current social habits.
And I think you have markets that are more deeply embedded in those types of networks and interactions that I think will also shift. I think Brian Flynn's been tweeting a bunch about how we're actually at peak attention markets right now, and that really when you work into like an agent to agent dynamic, it's actually going to be about just maximizing or optimizing for value at incredibly high frequencies. And so, agents negotiating on your behalf type thing maybe doesn't mean that I'm not sure I fully agree with that, but I think it's sort of interesting to think how that dynamics when it is just pure software to software conversations, how the models shift and evolve.
Totally. Yeah, I think another thing we're going to see, I think we're going to have another social DAO cycle, but they're going to be centered around, autonomous governance or agent managed governance. So I think, we're going to buy an NBA team together, buy the Constitution DAO, like all these kind of weird social experiments we saw in the last cycle that largely fell down due to human coordination and kind of just getting spread out. I think reintroducing kind of some very intentional, well-designed agents into the middle of that, I think could...
And the niches are stronger now. Like, frankly, at that point in time, people were into broadly NFTs. So NFTs were competing for that attention, whereas now people have segmented down into their special interests, even within crypto. There's so much more in crypto now that I have dug my way into a very concentrated niche which has blinders on for my attention and makes those things more possible to get into.
Yeah, I'm pretty convinced that like the DAOs are going to work as AI or agents better than they were going to work at, in the way that we were sort of thinking about them before. And really it's because the challenges of discerning value and distributing value, aka distributing tokens, is still a very blunt set of tools that we have to use there. Governance is clearly not something people want to go do. And yet I think this deep desire to feel like you are contributing value, like you are participating, that you have a deeper connection to an asset or a network than just the sort of like the trading of tokens is going to be, I think, important. I'm not sure if this is a this year type of thing. This is probably one of the biggest questions that I'm trying to answer right now, is just like where are we in sort of like the tech cycle or like the
Yeah.
infrastructure cycle around this. But we're seeing a lot of interesting things. You know, I think we're seeing these new types of social networks. We're seeing agents that have a lot more certainty in how they act, you know, being smart contract based rather than just being software based. We're seeing the more mimetic attempts at these sort of things like DAO.fun and AI16Z and Cerebro. And I think the big wild card in my mind is just like, what is the future shock that people face in dealing with this, and how do we overcome that? And I think that's maybe my biggest concern, generally societal wide, though. So it's maybe less important for AI. But
yeah, I'm less convinced that they're going to work in the next year, but I'm pretty convinced that we're going to see a ton of experimentation.
I mean, I think you're seeing experimentation already then, right? Like you look at like an AI16Z.
A bit. I think there's a few kind of disparate use cases, but less at like if you remember back to the last DAO cycle, like every week there was some new DAO with some like huge social ambition to go buy something or whatever, acquire land or like do all these things that ultimately like fell down because of coordination and governance and the heaviness of the processes. But I think we're going to see that tried again with agents at the center.
My advice to those folks who are doing it is to be a lot more in control and have stronger opinions for longer before you turn over ownership and decision making to your community. I think that there's such a speed of iteration that is being valued by the market right now that I think we've seen some teams make some missteps in trying to go too wide and too open to start. And I think especially as we start to niche down, I'd be looking for really strong founders who can lead these things as sort of an indication of potential value and success rather than purely just retail token holder demand.
Yeah. Maybe one more before moving on, and I'll have more in my newsletter as well. But I think pure meme coins are going to struggle to compete for staying power with the growing attention generation and value accrual capabilities of like sentient coins and also consumer product tokens. I don't think meme coins are going anywhere, but I think already we're starting to see, 6 months ago, like, new meme coins that got really hot would they would hit 100 mil and that would be a big thing. Now there's such a dilution in attention that hitting 10 mil is getting increasingly harder, and then that's going to go 5 mil. So I think it's going to take real novelty and real like making progress towards something over time and accruing real value over time to really stand out looking forward.
I agree. I keep talking about this as moving from attention to belief in sort of the mental model around how value is created. And I think belief is where mechanisms, where revenue, where I was going to say roadmaps, but I think that's a banned word in my mind. Like where sort of the ability to cast future iterations in the future and move towards them effectively. And I think we're seeing this, we talked about this before in the DeSci movement. I think we're seeing this in Hyperliquid. I think again it's just like it's a big deal. It kind of proves it's a new proof point for folks out there. I continue to use your tweet that I think you shared the other day, which is like if you don't generate wealth for your community, somebody else is going to go do it for you, which opens a whole bunch of crazy sort of lines of exploration or realities to folks. The number of teams that I think will have actually, okay, here's my prediction here. I think there will be, brands and teams are going to struggle to deal with this new meta where other people are launching tokens for them, and they're going to fumble the bag consistently in a way that will, that could either, like I said, they will be at a point where they could either take something that feels very uncertain and weird and maybe risky and actually leverage that to generate a whole bunch more attention, and I think in most cases they will sort of fade it and burn a bunch of credibility and attention with folks. And I think looking at sort of some of these agentic coins that teams that have sort of been launched on sub projects of teams, and those teams that have leaned in have seen massive opportunities sort of emerge. And then I think we've seen some teams, I think last night there was an Artblock COO that was playing around with an agent, launched the thing, it kind of pumped a little bit and then kind of disavowed it. And, it's just clearly could have been so much better if they kind of leaned into it some way. And instead there's just everybody else saying jail, which most people
freak out,
themselves,
step away.
But, whatever.
But also like what was that guy thinking? Like, what do you think is going to happen here?
But I think this is just the reality, right? Like it is as easy as posting. Markets are just going to be emerging like quite regularly, and how it really reminds me of the early social media days, right? Where all of a sudden there's people had to start to figure out how do you deal with negative reviews? How do you deal with people who are posting and saying like, and the answer is you have to participate. And it's not like you can't just sort of hang back and think that that's going to be okay, right? There's a new type of medium with which we are interacting in, and that's markets and digital assets, and it requires us to to play and speak the language rather than
Pair
being
your
afraid.
bad reviews with ETH and sit back.
Okay.
I mean, it's true though. Like what that guy should have done is looked and been like, oh shit, like I tapped into something here. Is there?
Well, I understand. I mean, I wouldn't go that far. Like, I think it is very fair for teams to be like, yo, like, I do not want to engage in this token and oops and stuff like that. But there is clearly a whole alternate universe here where that could have added a ton of value to folks. And so I think you're right. You have to have a lot more awareness around how, like, use a bloody docs. You're using a docs wallet. Like,
I mean,
that's the first starting point. That's just like silly.
I don't want to laugh about people losing money or anything, but it is tight. Like, it makes sense that like the founder of Art Blocks would look at Base like testnet. He's like, what? He's like, whatever. Like,
It wasn't the founder. It wasn't.
It wasn't the founder. Okay, sorry. I'm misspeaking. I don't know whoever launched
president.
COO, I think, was the
COO. Yeah. Base. That's testnet. No, people are paying.
I like that.
All right, let's jump
through some of these bloody things.
Yeah, let's jump to our next one. So the instigation for this is we were at our offsite last week. Really talk about the future of Seed Club, but also just talk about making sense of like the investment landscape within crypto and what projects have proven to have kind of sustainable staying power and which ones are kind of these blip moments in time. And Nicholas got on the whiteboard and drew a great chart that I think really resonated with all of us. So I think, Pete, you have a visual, and then Jess, I'd love you to just kind of riff on why this was so kind of clarifying for you to see.
Let's pull it up.
I mean, it was incredible on the whiteboard, and it's even better with the sound effects and moving lines. Yeah, I think I was going to tweet earlier. There's three things that are consistent in crypto. It's death, taxes, and there will be a new next crypto narrative that you have to play in. And I think like there's sort of a couple fail states that I think if you look at kind of the market should be, I think, big warning signs for folks. And I think they all come down to what I think is misinterpreting what is more of like a narrative cycle and extrapolating that into sort of a category and an enduring business model. And, I think because all tokens are so speculative and you can speculate on them so early, you sort of get these hype cycles that, you can clearly look back on the crypto market and see. And I think we should assume that will sort of persist into the future. And the challenge of the founder is like, okay, well, you kind of need to go and play in these narrative cycles to be relevant, but it is not sufficient to just be playing in one narrative cycle because things move so fast. And so, if you look at I think a lot of teams that sort of, you have the speculative demand, you have this belief that you have product market fit, that capital flows so easily, you can scale your team quite a bit. And all of a sudden you have this big org that is going after an NFT marketplace or is going after a certain type of L1 or whatever, that when the narratives shift and you sort of realize that you're at a local maxima, it becomes very, very, very hard to make a transition to sort of build. And so I think some of the founders that I admire the most have been the ones that have really acted based on this, right? So I would say Zora is an example of this, which I think has maybe too many cases.
OpenSea versus Zora.
Yeah, so recognizing that NFTs were going to be a cycle, and that high priced value NFTs that are trading is maybe not the right business model because there's sort of a cap. You're starting to see the growth numbers show off, and then the challenge of actually sort of saying, okay, well, I actually have to kill this thing that's working right now to be able to go be relevant in this next thing, and so. Yeah, I think the idea is like the ideal crypto business is one that is able to benefit from the narrative and financial values and learnings that happen in these cycles, but that are ultimately playing across multiple different narratives and compounding that value. And so I think the two examples that I think are do a good job of compounding that value are exchanges, right? It doesn't matter what the narrative is as long as tokens are being bought and sold, and you see the value of those exchanges. And I put Hyperliquid into this bucket as well. And I think L1s and to maybe slightly lesser degree, L2s are another example of this, where it's like, as long as there's net new assets that are compelling being launched on these tokens, there will be buy pressure and demand for holding your sort of gas token or network token, and we can start to see this value going up. And so I think it's, from a founder perspective, it's like, you kind of want to play in both. The error is if you don't realize that if you expect that sort of a roller coaster of mimetic virality is actually something that has compounding value. And I think there, what we were talking about with Derek earlier, like there isn't many other models other than the issuance and sale of tokens being early to the issuance and buying tokens or trading. Now, I think that is a massive design space, but so I think that's kind of the idea. I mean, I think if you look at the history of C Club, really we are have been building a brand that is hopefully continuing to build more trust and belief and winding up the social capital in it through participating in this sort of learning explorer point of view in these interesting cycles. And so I think when we started focusing on consumer, or when we started to get the DMs of like C Club's diving into meme coins that feels like it's off brand, I think there's a misunderstanding of how we see the market and how we see the world, and that the failure to be an early adopter and player in these cycles and recognizing the shifts and kind of being open and flexible to what comes next is going to kill your project ultimately. And that might be failure to get off the ground, but I think in a worst case, it's like I raised a ton of money, I have this big vision, I built this infrastructure organizationally, et cetera, that I really can't shift. And I remember talking to some investors back in the day. Remember, DAOs were a thing. People were building DAO tools. We're sitting here going, no, like that is not the right thing to go do given everything that we've known, and we need to make sure we're in a place to go play. And so if we had just gone all in on building DAO tooling right there, we would have built an org that would have been far too structured for it. And if you look across the board, those things have for the large part failed, or at least needed to make major shifts. So I think it's a very useful lens on the market. Are you building something in the mimetic virality loop, or are you building something that compounds over time? Obviously, it's not that easy. Often the things that compound over, the new big things that compound over time start off as these sort of toys, or looking more like playing in the mimetic virality loop. But I think if you look at founders, if you look at how they're building org structure, I think it sort of leads to, big, strong, big adventures that people hold to, but like a pragmatism in how you go and approach them. I think it means about keeping your team small and nimble and of the highest bar possible so that you can be effective at playing in the new things. And I think it's about building a narrative that is actually giving you the optionality and open space to be able to go play in those things. And I think this long-termism is like very much the right way. Like compounding value over time is how we create the most value here. And there we go.
Yeah. I mean, I think like Interface, who we talked to last week, is another good example, right? It's like there are these kind of meta status games, meta social context that they're building, regardless of what types of tokens people want to trade and buy or what they're doing on chain. Like that meta status game is gonna exist, and discovery is gonna matter, and the social context that they're building is gonna matter. So
I mean, I think social networks are the other great version of what it's like. It doesn't matter where their narrative is. It doesn't matter if people are saying good things or bad things. They're saying things here, and it's a very high context place for token issuance to come. And so I think that is also maybe a question I have when I look at things like Farcaster and Lens. Like how are they going to like profit or treat or value the sort of the issuance, the trading? Like it feels like leaning more into like the transaction as a social object than the content seems to be more aligned with it. I mean, I think that's the argument for Interface. So,
yeah.
I mean, I would love folks, if you think this is crazy, if this, to me, it's just obvious. It was sort of like the visualization of something I've been trying to use a lot of words to describe ineffectively over the last little while. But I don't know, maybe we're wrong. Who knows?
Whatever, we like it regardless.
I do like it.
Okay, let's go to Just Launch. So I did a few conversations with founders this week who are building on an emerging L2. Product is ready, but they're kind of sitting there waiting, toiling their thumbs for mainnet, and for whatever reason feel kind of beholden to the ecosystem that they kind of signed up to build on. And I just think that is so fucking crazy. And I also think that it's incredibly shitty behavior by these pre-launch chains who have like locked down launch dates to convince consumer founders to launch on their chain.
Next month.
Dude, and these chain, they've raised hundreds of millions of dollars. They need to go to market at, $10+ billion FDVs. They're not launching until this thing is perfect, because the risk of doing it and creating this fucking downward spiral of FUD is very high. These timelines are going to get pushed out. Like, you as a consumer founder need to be in market tomorrow. You can't be waiting for these people. So I think, I don't know, just
I love seeing it. I woke up to that tweet this morning and I was like, oh, Josh is back on his bullshit, which I am here for. I mean, I think, we have strong relationships with a lot of these
no, they're great.
Totally. They're wonderful people, etc. But this is what I say as well. We talked about it with the whole, like, should I switch to Solana, etc. L1 founders, their incentives are not aligned with yours all the time. They want everybody to come build on their chain. They have big BD processes, all this sort of stuff, which is very much the right thing to go do. But when it comes right down to it, you as a founder need to be in control of your destiny. And so looking out at just the history of people pushing this out, like, it is insane. If you have a product ready today, to wait. Yeah, especially given market dynamics that exist today. I did find it funny that actually underneath your tweet, I think it might have been the Conduit founder.
Yeah.
Said, oh, you just come watch my
I was
I
like,
think
not,
it's even
not,
bigger
not
bullshit.
exactly, not quite what I was getting at here.
No, because I mean, I think he's like, oh, you can launch on Conduit. Here you go, launch your own chain on Conduit in less than 50 minutes. I think that is just as dangerous, if not more so. Like, what are you talking
That's worse.
about?
No, that's worse.
Yeah, it's like
that's
that right there is like, I think one of the most important things you can do as a crypto founder is be honest and endeavor to be as authentic and true as you possibly can, because there's no shortage of FUD and bullshit that you're going to have to deal with. And so, misstating like, yeah, okay, you can roll it up in 15 minutes, but okay, understand what you were getting yourself into, right? There's massive infrastructure and time costs associated with it. If you have people who are actually coming and putting their assets on your chain, you better have a very confident process and tool set and belief in what you're building to ensure that you just don't burn people's money on here. And so I think it's a very, very, very unhealthy message to put out there. And I also think it makes me look at Conduit and I don't know these guys personally whatsoever, but it makes me go, okay, well, I can't trust you at face value here right now, which is so value destructive, I think, for these teams. So it's such a simple, like, you're trading off a simple marketing message that is obviously really good at getting people to sign up with introducing untold amount of potential risks down the line. And I think that the degen chain dynamic there, though I'm not looped into the ultimate details, is one example of that. I think we saw it with the Gitcoin L2 as well. There's to a different degree, there's still a lot of they have done actually a really great breakdown on what's the costs that are associated with launching these sort of twos are. So I don't know, I just like, let's be a little bit more honest here. I would like our L2 alt L1s, L2s to be honest with their founders around when is this thing launching and the challenges that are dealing with. We still got a lot of like smoke and mirrors and perfume and bullshit getting put out there. And I think from an infrastructure provider as well, like you want to have long-term, big, trusted projects come on build on you. And so like the best way you build a new category is you articulate the problems that your best builders are facing better than anybody else. It's not through pithy marketing messages.
And so yeah, I think founders need to take their success in their own hands. These ecosystems, like, they're not going to make or break your success. A fucking tweet from Jesse is not going to make or break your success. Coinbase is not going to make or break your success. Like, this is you going and building something huge is way bigger than the current size of this space or the current size of any of these ecosystems. And you need to go run at that and get out of this kind of expectation that these people are going to somehow magically hand you product market fit or something.
Especially with Bitcoin over 100K.
Especially with Bitcoin.
Like, what are we doing? And because I think, I mean, the only right way to look at the market over the next few months is that it's not going to last. I have no idea how long it's going to last. I'm not making price targets and stuff like that. But if you're a founder, you should assume that these chairs are going to, the music's going to stop pretty soon, because it will eventually, and the market will shift again. And so you have this window right now where if you're going to be launching a token, if you're going to be launching a product, you're going to be launching a network,
get the fuck out there.
Exactly. Yeah. All right. Well, that went as well as expected in that I think we actually did get through more than I thought we would.
Not bad.
Not bad.
So read my newsletter. I wanted to talk about World App because I think they're doing the craziest they're running the craziest distribution and acquisition strategy of any chain I've ever seen in my life. And I kind of run through that. And I think it's still flying under the radar for most people.
You know what this is?
Is that a WorldCoin card?
It's a WorldCoin. It's metal. It has a code on it that is entitling me to my own orb that I have just ordered and will be shipped in the new year. I went to their launch down in San Francisco. Thanks, Leighton, for the invite.
Should we just run through it real quick?
Sure, let's do it.
So, like, their big goal is really to build a network for like verified humans, right? So I guess increasingly resonant mission as people are watching the rapid acceleration of AI and unable to know what's an agent and what's a human anymore. So I think they're getting this kind of pretty differentiated category defining mission right. Then they have this crazy eye scanning orb that people obviously want to experience that onboards them, and they're going very hard on.
I think there's some hesitation, frankly, with a lot.
I think there is, but then you had hesitation, and then what? You're standing in front of the orb, and you're like, all right.
No, it was that my value was that $50 wasn't going to get me to do my iris, but an orb that's worth $25. My iris is worth $2,500 to me. So you're right. There's a price with which it hits.
There's a price,
like,
and I think most people's price is lower than your price. So, anyways, then they're doing
my
this.
Price was lower than I thought it would be too, quite frankly.
They're going hard on acquisitions around the world, and then once you've once you've scanned, you actually earn tokens, but they're only claimable in the app. So everyone has to actually go and download the app. And then the tokens are claimable monthly. So they're forcing usage and retention of this product. Then they push you to stake and earn yield in the product, which you're going to do because you're kind of waiting for all of your tokens to unlock. And then that kind of sets you up for more sessions because that number is going up. And that's always fun to see. So people are opening the product more. Then they launch a chain. And the only way to access the growing distribution they have in this product is to go deploy on this chain. And their numbers are actually very big and meaningful, apparently, based on that tweet. So builders are going there and wanting to launch on this chain. And then now they have this kind of accelerating flywheel of builders and eyeballs that are I don't know.
Yeah.
So who knows? Obviously, like who knows where this is going to be in a year when these emissions dry up or whatever. But
well, I think that like it. I think the interest of which you're looking at, or the lens you're looking at this through, I think is really correct, right? It's like how do you find the right people to join your network? How do you incentivize them so you solve that cold start problem? And then how do you leverage that attention into something that will hopefully create more lasting, enduring value? And I think that's through their app store, and that's through the chain and you know the things that get created on there. I think I think there's certain types of apps that are going to work well on WorldCoin, and they'll probably be more financially tied. And I think there's sort of like some folks who see, 6-7 million real people and think this is a good place to launch a meme coin or to launch maybe more of a consumer product on top of it. And I think the reality is most of the people who have joined this are very, let's call it mercenary and maybe the small M model, right? You're doing it specifically for those tokens. It's most in sort of developing nations right now that they're trying to change that. And I think, there's reason to believe that they're going to be able to really extend the number of people who are using this, because I think they have new verification methods using certain passports and government issued IDs, et cetera. But it feels like a very not crypto native user base there. And so I think the products that are going to thrive there are going to be much closer to utility and to apps than to maybe the things that we're most excited about when we look at consumer crypto. But yeah, I think it is a really interesting bootstrapping mechanism. I also think that this is clearly still a huge, huge problem that, imagine if we do have effective decentralized identity at scale. It really adds a lot of new, or it's a big tool for things like token distribution, for contribution, rewarding contribution, et cetera. And so, I think through that lens, I'm just very excited to see more people push towards that. I think that the App Store model is the wrong model. And I feel like this is going to maybe be a big risk for them. We're living in this sort of like news feeds and AI, I think are and thinking about what the right user experience is for that. And so I feel like there's a risk here that WorldCoin is just going to feel a step behind as we start to lean, as more of the user experiences and consumer apps are leveraging, this hyper fragmented or generative types of content that are kind of populating all these different networks. And so that's the only place that I'm like, it feels like the app is it feels like an old technology we're trying to apply to a network. But I think the basic idea, and it's very smart, come hang out, claim, you got to check in regularly or you lose it. And, this conversion into staking, and they have a smart model where there's sort of like a cap on how much you can stake. So there's sort of some, ability to maintain that sort of value across a growing number of folks, and also not sort of commit to increasing more of a plutocracy than probably already exists in the token holdings. So definitely something to watch and see how that adoption goes.
Yep.
It's awesome.
1111. Oh, that's an angel number. All right.
Jacob,
Episode 58. Thanks to Derek from Collab Currency for hanging out and going back in time with us and projecting out into the future a little bit. Congrats to Bitcoin and Mr. Satoshi or Miss Satoshi for the incredible work they've done for bootstrapping this entire crazy world that we're building in. I feel like, we're doing a Twitter Spaces next week on Monday with the Mass crew and Social Ventures, trying to just dive into consumer investing and what these teams are looking for and what the world looks like. I think, Josh, you've been doing a great job of tweeting about the delta between what VCs say on Twitter and where they put their money exists. This is a group of people who have been very active in investing in consumer throughout the bear market. And so I think it should be a good chat. So we'll have that on Twitter Spaces on Monday. And we will be back again next week at 10 a.m. Pacific, 1 p.m. Eastern for episode 59 of Internet Explorers. We're also, we're going to get back to some Twitter Spaces bullshit. So keep an eye out for that as well. I think I love this format in a way because it just feels like us jamming here, but I do not engage in comments we don't get to bring other people up. There's a lack of dynamism in it that I think I'm kind of excited to start playing around with again here pretty shortly. So be on the lookout. We'd love to pull you up and, you know, create a bit of a space for us to explore what the fuck is actually happening here together.
Yep.
All right. Thanks, y'all. See you on chain.
Peace.
Internet